Hello, everyone. Thank you for joining us today. We have a wonderful guest, Homer Smith, who is with Integrated Private Wealth. He's the executive director, a lot of experience and a lot of knowledge in lots of areas of lots of aspects that are not just about the investments. That's really a smaller part of Homer's experience. It's the taxes. It's everything that ties into greater wealth. So, Homer, thank you for joining us today. Good to have you here.
Craig, thanks for having me. Excited for the conversation.
Excellent. Homer, I always like to start with so you got into a particular industry. Yours is financial services. You've been there for a couple decades. Just curious, what got you interested in being in the industry and why?
All the way back, I initially wanted to go to law school and was going to college for that undergrad and ended up taking a business law class and just really fell in love with that aspect of it. So like, all right, I'll do a minor in business. And I took one finance class and had a really great adjunct professor who came from the business world and it was a corporate finance, how to value companies, all that sort of stuff, and just fell in love with it. I just got it, and I barely had to study, and I was like, okay, that probably makes sense. I just switched to that, and it was in the late '90s, during the dot-com craze. I thought I wanted to go into investment banking. Did an internship in that world. Didn't love the analyst work. Really realized I liked being in front of people and helping people solve problems, and that's how I got more into the direct financial advisor business. And interestingly enough, my first week as an advisor was the week of 9/11, 2001. So came into the industry at a pretty interesting time, wondering did I make the right call. But one thing that I've always been pretty good at is being able to quiet the noise, take really complex topics, make it simple, help clients really think through and get to what's most important to them. And so I was able to navigate that pretty well, and it's kind of off to the races from there.
It's an interesting background. So you're going down the lawyer road, and it's like, oh, okay, and I'm sure you would have done great at that. You're great at what you do. I've had the opportunity to get to know you, and just the knowledge and your hunger for that knowledge is really impressive in the industry. So there are many different types of practices and financial advisors in the industry. I mean, you've got the folks that are at the banks, right? You've got stockbrokers, insurance agents, financial advisors. How would you describe your practice and the clients you choose to work with?
Yeah, I'd say the closest name or word in our industry for how to describe what we do is a multifamily office. So our goal is to bring really bespoke tax, estate, asset protection, investment, and concierge solutions to clients to make it feel like they have their own family office working for them, but that we can provide that for many different families, but do it in a very individualized, custom way for each one of those families. And how I got there is probably 15 years ago when I was leaving more of the broker dealer world and getting more into the independent side. I was working with a CPA firm, and I was getting introduced to their best clients, and those clients tended to be business owners. But up to that point, I hadn't worked with a lot of business owner clients because if they didn't have investments to manage, I didn't know how to help them. I didn't know what to do with them. But I recognized that those were their best clients and they had problems. I just didn't know how to deal with them. So I decided to basically go to school on business owners and read everything I could on the challenges facing business owners, what they really care about, the different solutions for that, whether it's exit planning, growth planning, and really came to know that the thing they hate the most is paying taxes. And so if I could build my knowledge on tax planning, estate planning, and business succession planning, that would be a value add to those business owner families. And when you looked at kind of the stats for wealth in the country, for families worth over 25 million, like something like 95% of them are business owners. So okay, if I want to work with families that have real problems, and I love to solve big problems, got to go to business owners. And so that's ultimately where we've really tailored our practice, and the integrated private wealth practice is really tailored to private business owners heading to a transaction with really big tax, estate, asset protection problems, and getting to help them get to an outcome that they can look back on and feel really good about.
That's interesting. How that creates a question for me. So I've worked with hundreds of advisors, coaching them, supporting advisors. I've gotten to know many of them over decades. And an observation of consistently better outcome for clients is advisors who are always hungry to learn. You're one of those guys, right? So I'm putting you at the highest end of that spectrum as someone who's constantly learning. What drives you what drives that hunger? What drives that passion for you?
Yeah, I think it's two things. One of them is just a fear of boredom, and so I think that if I am running meetings and they sound the same every single time, I get really bored, and that just means I'm not finding new ways to add value to clients if the meetings are just the same every single time. Very related to that, as I started working with higher and higher net worth business owners, I just kept sensing more areas that they needed help in that I didn't know everything about. And I'm like, okay, well, I can be that resource. I don't necessarily have to be the expert in every one of those areas, but I at least can be knowledgeable enough to know then how to solve that problem for them, who I needed to bring in, what solution that I could put in front of them. And so I just have this hunger, this thirst for being able to solve problems for clients. And I, you know, a little bit surprised, not anymore, but when I first started working with higher and higher net worth families, even families worth well north of 100 million, 250 million, you would think, okay, families of that level of wealth, they must have it all figured out. They're working with really good professionals. What I found, even if they were working with really good professionals, they had nobody that was kind of looking at everything holistically and that understood enough about each of those areas, again, to be, call it knowledge, but to be dangerous. But again, I wasn't necessarily the expert that could solve it, but I could recognize where the gaps and holes and opportunities were and be the coordinator of experts for them. And so to play that role, you have to know a lot and be comfortable with, at least knowing enough to point them in the right direction. So that's a lot where the hunger has come from.
So let's unpack that a little bit more. Let's take the investment component of the industry. Let's just move that aside, right? You've got tax strategies and then you have tax strategists, right? And then you have estate planning and then you have estate planning strategies. You have the business valuations, you have all the legal complexities. So it's not just a single discipline in the investment side. It is all of the other things. So is the value and the hunger across all those other things, and not just knowing them at a surface level, but knowing how to optimize the connectivity? Is that a reasonable? Uh,
Yeah, I think that's really important. So if whether it's estate planning, I would spend a lot of time with estate attorneys and asking, like, kind of doing a case study around a client, confidentially, of course, but like, hey, here's the fact pattern. Like, how would you solve this? What are the things I'm missing? And then they bring up a type of trust or a strategy I wasn't aware of. Okay, do you have any reading on that? What can I go? I've read some pretty boring books on tax strategies, trust strategies, life insurance strategies, but because I'm willing to get into the weeds on it. So I never want to be in a position where I'm putting something in front of a client where it sounded really good at one seminar I went to, but I really didn't do the work to know, is this legit? Is this been validated? Can I really feel like I could put this in front of a CPA or attorney and that they're not going to, scoff at it? And so I have that feeling that for the client's sake, I need to at least know pretty well in depth what this strategy means and how legitimate it really is and where it really works. And I don't want to waste clients' time, right? So if I know it's not something that's going to make sense for them, I don't want to get their hopes up on something only to, once we get into the unpacking of their situation, we find out it doesn't work, right? So, yeah, it's just for me, it is, some of it can be dry, but it's not boring to me. If it can save a client 6-7 figures in taxes, that's pretty exciting for me to figure out.
so your passion and your curiosity drives the hunger of finding unique solutions that are not just simply plug it in, right? It's how it connects to everything else, and then the multiplier effect of that. Okay, you've got a very unique perspective. And I can see where you're very comfortable with the ultra high net worth folks, whatever that dollar amount is. So, with your decades of experience, what do you see as the most common expensive missed opportunities for individuals or clients or prospects, whatever you want to call them, but people that you meet or just things that you've learned. What is the most common and expensive missed opportunities?
Yeah, I think, unsurprisingly, given our conversation where we've been up to at this point, it is taxes. There are so many things in the tax code that are available to business owners, to high income earners, but they're typically also the busiest people. And so for them to take the time to learn it themselves is very challenging. To find the right people who are looking out for truly their best interests, to make sure that the strategy actually makes sense. Um, but it's been really, really rare where we get introduced to a high income executive or a high income business owner where we weren't able to find significant savings, again, that were bright line transactions right down the middle of the code, and especially around the biggest events, the biggest liquidity events that they have. And so that, I would say, if we want to dial it in one layer deeper, it's the missed tax planning around liquidity events, whether again it's corporate stock or whether it's the business transaction itself. There are so many things you can do to mitigate, reduce, defer out the tax. They just often are in a position where they don't either feel they have the time or they don't have the right people around them to make sure they're aware of them. And that's always my goal. And I tell to pretty much every new client, especially, as I say, look, at 2 times I want to be in a position where every January 1 that you can look back and say, at least I knew. Right? I may not have implemented every strategy that was available, but I at least knew about them. And then after a major transaction, I never want them looking back saying, if I had just known about that idea, that could have made some big impact on me. Again, same thing. They may not choose to do all of the things that are available, but I want to make sure they're at least aware of them, and they can make the decision if it's right for them or not. I never want them running into me 3 years later, and I'm like, oh, did you know about this? Did your people tell you about this? And I'm like, and it could have made a 7+ figure impact on what they got to keep from all of their life's work. That drives me quite a bit in that area.
So you work with complex business owner situations, and that's not an understatement. So where do you typically see the greatest opportunity to improve both the short-term and long-term multi-generational wealth, thinking of the basic concept, the time value of money? So a dollar saved today and invested over X amount. So
Yeah.
where do you typically see the greatest opportunities? Is it in taxes or is it in other areas?
Yeah, I'd still say I can broken record, but it's taxes. And it's interesting you say that in the way you even describe it, because that's the way we walk clients through it, is in why we focus on taxes so much is it's controllable. Like if you know the strategies available, I can tell you to the dollar amount if you implemented it, what it likely would save you in taxes. And then I can also help you think through not only what I saved you in taxes, but if we think about compounding over time, what that tax savings actually turns into year over year over year over year. And if I can save you $2 million in a transaction, just as a pure example, and you get a long-term 10% return and they're 50 years old, I'm like, okay, you got 4 to 5 doubling. Well, if it's 10%, they've got like 6 or 7 doubling periods left in their life, right? So that 2 million turns into 4, turns into 8, turns into 16, turns into 32, turns into 64, right? These numbers start to get really big for just what that initial tax savings can mean for them and their family in multi-generational wealth. And they don't do that math, right? And then when I compare that to investments, I'm like, I think we're pretty good at that in managing wealth and preserving wealth for clients. But yeah, I don't know from year to year what investments are going to do, right? We won't know if what our philosophy is around investments worked for 10 years. And looking back and say, okay, did we do a good job managing the money for you? I hope we do, and I think we're pretty good at it. But with taxes, I have a lot more certainty on if we help them implement a strategy that makes sense from a tax planning perspective, I have a lot more control and certainty over the outcome for them. And so that's why, I'm kind of a control freak. I like to be in control as much as I can, and that's an area that I feel we just have a lot more control on than investments.
The control comment is interesting because you see and have seen the multiplier. So when people have a larger disposable income, it gets to a certain point where that money's going to go to the next generation, And it's that planning and that time frame. So you're not planning for, somebody's 60, great, they're going to live statistically till 85, maybe 90, maybe a little bit more. But you extend that multiple generations, you're looking at another 50, 75, maybe 100 years of impact, if not longer, where it's managed appropriately. Yeah, it's important not only to work with that client, but the multiple generations thereafter.
Yes.
You're unique, yeah, you're unique in that space. Where do you see the most people, where do you see that people most unknowingly disadvantage themselves? And why do you think that happens?
I think it is, again, biased. And this is what I tend to run into are families that have a lot of sophisticated professionals around them. They've got a really good CPA. They might have a really good attorney, might even have really good investment people. Uh, what again, kind of back to my earlier comment, they don't typically have somebody that's able to look at the whole picture and identify the gaps. And we tend to see a lot of gaps between them because those professionals aren't typically talking to each other very often. And again, nobody is looking over all of them and making sure that everybody's doing things that are going to actually get the outcome the client wants. Right? They might be doing really good planning or really good compliance work, but they're not asking all of the questions. Like, what do the client really want their outcome to be, and are the things that they are recommending going to get them to those outcomes? And what I find is most clients in the business owner world are so busy just running the business, growing the business, they don't even necessarily, if you ask them, what outcome are you really trying to get to from all of this, they don't even know. And so the very beginning of our process is really driving into what outcomes do you really want? Okay, we can then use that to drive all of our planning around that and make sure everything that everybody in your teams are doing are aligned with getting you the outcomes that you really want. Not just doing really smart planning, which is important. It's an important component of it, as long as that planning is directed at the outcomes they're trying to get to.
So the visual that comes to mind, if you hold up your hand and you've got the different silos, right, that somebody is in, but those gaps between those, that's where the money's getting lost. And where you can close those up with someone who sees the entire picture in lots of different ways, that's the opportunity. It leads me to the next thought where you've got business owners, they're running the business day to day, they got a good lifestyle that's coming out of that economic engine. Eventually, they're going to sell that business. There's ways to optimize that value. So, what's the typical disconnect between business owners and what they have going on in their business and their personal wealth situation? Because I believe that could be a pretty wide void, right?
I think that's an interesting topic and something that even me and you talked about, I think, in one of our very first conversations that we had, that, for non-business owners that are just building individual wealth, or even business owners post a sale, they're pretty happy to pay their professionals 0.5%, 1% a year in total fees to optimize their financial picture and manage their money for them. Most business owners don't think of their actual business as their biggest investment, right? They think about it as a lifestyle business, or they think they know they're running this business, but they don't actually look at it from an investment standpoint, right? When they're measuring me on their investments, like, how am I comparing against a benchmark, whether it's the S&P 500 or some other investment benchmark? They're not looking at their business that way and comparing their returns to other businesses like them. What should they really be producing from an internal rate of return on their business? And they don't necessarily think of the paying professionals for the same outcomes, right? And like, what if they thought, and this is again a concept, the framing of it that I think you brought to me, that I didn't think about it quite this way, but I've been using a lot since we met. Why should you not be willing to pay a similar fee to professionals that are going to help you optimize the largest investment asset that you have, which is your private business? And I've always been good at helping business owners think of the work that we do as a profit center, and hey, the fees you pay to us are not a cost. We're going to actually generate value, whether it's tax savings or help you identify something within the business to help you grow it. But really getting to that idea, that concept of you should be thinking about your investment in your business the same way you would outside. I think that's just a concept that most business owners don't think about. They're driving to costs. What does this cost me? What is this, versus what? Okay, yes, it might have a dollar figure attached to it. What it's actually going to create for you. If we can create a 20% lift in your equity value because we were able to bring the right people in to shore up your operations or shore up your financials, which reduce the risk to a buyer, which means they'll be willing to pay you more. Like, what was the rate of return on that cost, right? It's massive.
Huge. Yeah.
And so helping them try to change the mindset from these types of things being cost to these things being investments in the business, and then how do we then show them? I think that's one thing I've gotten really good at, and why we've made such a difference is I'm able to help them translate that into the value it's going to create for them, or at least the projected value, right? They've got to implement it, it's got to work, but we're able to show them, hey, if you implement this is the expected rate of return that we would get from doing this within your business. And once we can get them to that mindset, they're typically much more willing to make that investment.
It's kind of like a value chain in a way. You've got you pay professionals to increase the value of the business, right? So, and it increases over time, more by intention instead of by accident. And then you take that multiplier, the time value of money, over 10, 20, 30 years, and then you take it multi-generational. That small amount of input and the massive amount of output is huge. Yeah,
Yeah.
power of it.
Well, and why that's so important, I think we've shared some of this, but some of the work that we've done on business owners, something like 30% of business owners that start the process to go to market complete a transaction within 2 years. That's more like middle markets, larger businesses. But of those that complete, so only the 30% that are able to complete the transaction, 80% of them feel that they didn't optimize the transaction from a financial standpoint. So you put that together, it's only like 6% of business owners that start the process feel like they were able to complete a transaction in a way that optimized the process. So that's like the business sale part. But then you talk about the multi-generational part, and you may be probably familiar with some of these surveys and stats too, but something like 90% of wealth is lost by the end of the third generation, right? So you add that in, and it's less than 1% of business owners not only are able to complete a successful transaction, but then also able to successfully transition that wealth multi-generationally, right? So that's a big problem, right? And those are the types of things that I get excited about. Like, what if we can making even a 1% improvement at the end of that line, going from 1% to 2%, that's a big difference in these families' lives that we can make. We can actually make a dent in the world if we actually can execute on the things that we do for clients. And so those are the things I get excited about.
That's where the family office can include that extended family, the second or third generation.
Yeah.
You get the continuity with the advisors such as yourself that helped create more business value, more tax efficiency, more wealth, and more multi-generational tax efficient wealth thereafter. Valuing a business is interesting, and a lot of times people think about selling, and that's when they get the valuation. You compare that with you compare that with an employee, right? They get their W-2, they got the 401k balances. Maybe they had some rollovers just through job changes. There's their house value. It's pretty easy to figure out what the net worth is. But you look at a business owner where their largest asset is typically the business. When should they start getting a valuation? And there's lots of different ways to value a business. When should they start getting a value on the exit value of their business? What are your thoughts on that?
Yeah, I think every year. I mean, at the very least, there's tools now that can at least give you an informal valuation of your business, and it can give you at least a general direction of are the key metrics that you are focused on, lining up with industry, levels and different benchmarks. But if your business is growing and you're getting serious about a future exit, even a formal valuation at least annually makes a lot of sense. Because again, if this really is the largest and most important asset in many of the business owners we work with, it's 20, 50, 100 plus million in enterprise value of their business. 15, 20,000 a year to make sure you truly understand how the market is viewing your business and what the key issues are that you need to address to optimize it even more. Again, to me, a small investment to give you a lot of good value, and not just you, but then the advisors you're working with, to give them all the insights they need to help you drive to the outcome you're looking to get. So to me, it's just every year you should have at least an informal, And then depending on the size and path to exit, every year even a formal valuation makes sense.
In a way, it's kind of like an employee never looking at their 401k balance until they're ready to leave their employer. Whereas what's common for most employees, they're looking at it a couple times a year, they're making some adjustments if they're working with an advisor. Why wouldn't you? The dollars are there, the opportunity to improve the outcomes are there. Knowing what you know, which is a lot, you're very well studied, and that's what I love working with you. Just you're a knowledge sponge, right? You absorb a lot, and then you know how to apply it. So, what are three things that people can do to improve their typical situation, and why those three things?
Question, three things. I'll try to think of three good ones. So, I mean, at the very least, I think everybody should get, a second opinion, right? And actually get a review of their overall financial situation to, from, again, I'm biased, obviously, I think we do a really good job at this, but somebody who is, multifamily office, holistic planner that can take a look at your entire situation and make sure that you're at least aware of the gaps and opportunities that are out there. I do think another one would be, if you're a business owner and you're planning at some point in the next 5, 10 years to sell your business, if you haven't gotten at the very least an informal valuation, but ideally at least one, formal valuation, you got to do it. You got to find out what you're starting from and then what the gap is to where you need it to be, so you can start to work with your team on addressing that gap. And if your business is worth 20, but you need it to be worth 50, there's a lot of work to do to get from 20 to 50, and you need to know that typically doesn't happen in a year. That's going to take some time to put the pieces together. And then I would say, getting family involved earlier than maybe you think. And I think as generations turn over, that's becoming more and more comfortable and more common. But we work with a lot of families where kids, really have no idea what the true wealth of the family is. It's getting, with technology and Google, it's getting easier to make guesses. But I find that those there's really good reasons to have really good structures in place around your wealth, like trusts and different things, estate planning wise. But if your kids don't understand why those structures are put into place, they can become a burden and frustration, and they don't end up then doing the things that they were intended for. And so educating the family on the value of what's been created and what it took to create it and why certain structures are in place is going to give the family a lot better chance of sustaining that wealth and making it multi-generational.
Kind of, there's all the work that goes into the tax efficiency, the wealth building, the business, all of that, right? And you're right, if somebody doesn't understand the why behind all those efforts, they can easily pull the wrong string and it all comes unwound. And then the taxes that come out of that. With so being in the investment space, right? The markets are always going up and down sideways. Whatever they're going to do, they're going to do. Beyond the typical market movements, what's the hardest thing about being an advisor?
This thing. I think for me, it's just the knowing the impact that we can make. Um, if for whatever reason, we're not able to get a client to a point where they're comfortable making a good decision, like we really see an opportunity for them to save money on income taxes, estate taxes, get a better outcome from their business transition, and for our lack of ability to communicate it to them and get them comfortable with it, that they aren't able to execute on it, and then they miss out on some major opportunity that they could have had. That's kind of the things that bother me or drive me, is like if I feel like we didn't deliver on our value promise to those clients. I think we're actually really good at it, but those are the things. If I like wake up at night and I'm like, oh, did we do this for this client, and did we get them this outcome, that did we get them this response on this critical issue that they needed to get from us. But that's probably the biggest challenge for me, is how do we make sure that if something is in our control, an influence, that we don't miss it for clients.
It's almost like every client situation is a team, right? Because there's the immediate people and then there's the extended family, and you're the coach of that team,
Yeah.
and you want to help every one of all of your teams succeed in lots of different ways. So, what do you enjoy the most about being an advisor, and why?
What I love the most is solving these really big problems. And when I mean a lot of the biggest satisfactions are when a business owner completes a transaction. They actually got the number they were hoping for. We were a part of that process to make sure they got that number, and we made a meaningful impact on the outcome by making sure they kept more of it themselves. Um, those are meaningful. Those are big deals, and the numbers are big, and the outcomes are big, and then what that allows them to do for their family, for causes they care about. And it's hard, as we talked about. It's if only 30% can actually transact, and of that only 20% of them feel like they got an optimized outcome and didn't have major regrets. It's only 6%. If we're getting our clients there every time, that's a meaningful deal to me. So those are really satisfying outcomes.
Helping your clients win in lots of different ways. Last question that comes to mind, and I really appreciate your time and your insight today. What life advice impacted you, or what advice would you share with our listener, or both? You can answer either one of those. So again, life advice that impacted you, or what advice would you share with clients, or both?
I'd say this is always a tough one for me because I'm so self-driven, and hard-headed sometimes. So it's interesting. I'll share one that I sometimes misframe when I'm trying to talk to my own team about it. But very early in my career, I was I went into leadership early on in my career at the broker dealer world, and at one of the first conferences I went to, one of the leaders stood up and said, "Well, there's two of them. One was you always want to be underpaid," and what he meant by that is if you're underpaid, whoever is paying you is going to feel like they're getting excess value for the work that you're delivering. But if you're overpaid, you're replaceable. And so my hope and my goal is always with clients is are we making them feel like we are underpaid, right? For the value that we're delivering, and I'm okay with that because that means they're sticking around and we're delivering real, meaningful, excess value to them. I think the other one that I've always been really good at, and I heard very early on in my leadership career, is focus on what you can control. Right? There's things you can control, things you influence, things you don't control, don't influence. That most people spend most of their time on things they don't control or don't influence. I've been really good at focusing on things I control and limiting the time I spend on things I don't control and don't influence. And that seems like a really simple idea, but that's where so many people end up spending hours and hours and hours a week talking about things, complaining about things, drama. I don't have any judgment on that. It's just those hours are now lost that you don't have to go do, build your knowledge and do bigger things and get the next client and all those other things. And so I just try to limit that as much as possible.
The power of intention and where we focus our time is very impactful. Homer, any comments or anything that you'd like to wrap us up with today?
No, I just really appreciate getting the opportunity to share. This is obviously something I'm very passionate about and love working with business owners and executives and helping solve really, really big problems. And yeah, it's just something that I journal every day. And one of the things that it asks about either daily or every week is where we're at with our the things that we're passionate about and the big goals that I have. And it's like every week I get to say like, yeah, no change. I'm only, if anything, I'm only more excited and passionate about the goals that I have and where we're going, given the needs that are out there for the work that we do. And so, yeah, I just love this stuff.
Seems like it's not about right or wrong. It's, hey, what you have is good. How do you continually make it better? So, Homer, as the executive director of
Yep.
Integrated Private Wealth, certainly
Yes.
appreciate your time and your insights today. Thank you very much. And if you'd like to, Homer, if they'd like to reach out to you, how should they get in contact with you?
Our website is the easiest. It's integratedpw.com, and you'll have all of our information there and an ability to reach out and set up a time to talk if that's what you'd like to do. So, yeah, appreciate it.
Thank you, Homer. Appreciate your time today.
Thanks, Greg.